Why struggle through a post-merger integration when you can glide through it? Why deal with the PMI integration challenges when you can overcome them even before they occur? Why move slow when you can move at pace? What are the world's leading PMI experts doing right now to achieve profit-accelerating integrations? This podcast will give you all the answers to these questions and many more. My name is Dudley Peacock, and welcome to the 100 Days and Beyond podcast. Welcome to another episode of 100 Days and Beyond, the podcast that is dedicated to the mergers and acquisitions sphere, the space in which companies are purchased, companies are carved out of other companies, businesses are separated into multiple pieces. But every time something like that happens, there's an immense amount of work that has to take place. There's really just I don't know. It's very, very difficult to explain in a very short space of time. But essentially, what happens is you have a whole load of leaders and people of different backgrounds, of different skill sets and specialities. Various people coming from different aspects of either the acquiring business or the target business, and getting them to work together, and getting them to act in the right way. Today we were meant to have JP Verdier. I think he's having a few technical issues. I'm going to wait a few more minutes for him, and barring that, I think we'll probably just quickly go through a few points around M&A, and also probably more around the post-merger integration or post-acquisition integration space, and then we'll leave it at that for the weekend, and then we'll pick it up with JP again probably next week. But to those of you that have joined, thank you very much. I look forward to having quite a reasonable, very short probably episode today. But what I would like to just go into, and that is something that I've noticed in this specific space, and I want to mention it specifically because there are so many types of practitioners, so many different types of industries. If you look at from SaaS through the software as a service, if you like, through to your fintechs and all the tech-based businesses, through to engineering or your more legacy type businesses, agriculture, energy, industrials, etc. If you look across many of those arenas, we have a constant shift of the markets, and we have a constant shift of the way that things are working and the way that things are operating, and especially now that we're looking at, I think they're even talking about doubling the interest rates overnight. And that's going to cause some huge disruption in the marketplace. There's something that I want to mention. Maybe there's two aspects to it. The one is really about leadership, and there's so much been written about leadership, but leadership and mindset and the ability to get on with things, right? So when we look at mergers and acquisitions, especially post-merger integration or post-acquisition integration, some of the critical things that have come up again and again and again, and that's this take action type leadership, this ability to not let the things around you consume you so much that you go into paralysis. And I think if you think about an attribute of a merger and acquisition specialist, or someone especially on a deal making side of things, and those people that are constantly looking for new opportunities are looking expensive these days. With leveraged buyouts and that, there are a lot of private equity firms and investment firms, family offices, high net worth individuals, and so on, looking for special golden nuggets out there. And I think people are becoming more picky and more choosy about it. But what I am noticing, however, is in times when it's I think when it's trying, I think it's in times when I think looks like JP's joined us. That's all great news. We're gonna invite him in now. But I just want to just finish my thoughts. So in trying times, in times when it feels like the world is caving in, and when it feels like things are just not going the way we thought, true leaders don't go into paralysis. And I think there's so much written about leadership and about taking the lead and about understanding sort of what's the best way forward. And what the best way forward often is just taking a decision, doing something. Often I've seen it happen. In fact, one of the clients that I spoke to about 2 weeks ago, there was a huge change that was literally going to go through Parliament. A new law was going to be passed within 21 days. It literally given this particular industry 21 days to respond. That week, that client of mine, that week, he was totally consumed by the thinking around that particular problem. He just consumed. It slowed him down so much that entire week was him himself had almost zero productivity. Where on the flip side, I've got clients where no matter what happens, no matter what comes flying at them every day of the week, every moment of every day, they're taking action. They're taking the lead. Doing the leadership thing, which is you've got to lead from the front. You've got to show that you are out there. And one of my mentors and probably favorite people. He's a very controversial character, but most favorite people. I'm not going to mention his name, but I'm just going to mention something that he says always. He says that you must always be thinking. You may be wrong, but you must never be in doubt. And he says, say that to yourself, say that to your people, say that to the people around you, and especially say that to your spouse. But you may be wrong, but you're never in doubt. And the doubt is what creates paralysis and slows you down from making decisions. I want to go now across to JP. JP's just joined us. So I'm just going to say good morning to
Very
JP.
good morning to you. Great pleasure to see you, and apologies for being a bit late.
No worries at all. I thought I might as well start the podcast this morning. Thank you very much for joining us, though. Much appreciate that. JP is one of those guys that are from what is known as corporate advisory, corporate finance and investment banking, and so on. And I think JP, you must have seen a lot of this stuff. And I'm going to just go straight into it. Leadership and this paralysis thing that happens. I've seen it in politicians. I've seen it in management. I've seen it in operational people, sales people. It's like something goes wrong, and then things just slow down. It's like even with an acquisition, when there's some kind of M&A work being done, and you hear down the grapevine, oh, our company's up for sale. What's going to happen to my job? And then it's sort of then the doubts and the fears and all that start creeping in. And the difference is those that actually take control of their mindset and their thinking versus those that let things happen to them. And I thought I'd just start the episode off with that. But we're gonna go into your really good CV soon, your resume. So, but first, just tell me, just off the cuff, do you have any experience around that? I mean, have you seen that happen in marketplace?
Of course, Lally. And it's a critical one. It's a critical, topic in the M&A world, of course, because transactions do take time. It's not like in capital markets. Transactions do take time to think about, strategize about, and then the whole transaction momentum, and then obviously afterwards. I think I'll probably answer your question in two ways. The first one, don't be concerned about things you can't act upon, because if you can't influence them, well, that's the way it is, and then continue to drive the ship in the direction that you think is the right one. So in the M&A world is pushing on, and if there are things therefore that you can influence, well, then do influence them. I think that's a very good way to make sure you remain focused. The second topic is, I would think, grit.
Mm.
Have grit. Don't let hope drop. And the M&A world, you've got lots of peaks and troughs and ups and downs, and those who do succeed are the one who effectively roll up their sleeves and push. And actually, that's what is really exciting about this job.
Yeah, and I think that's what defines, I think, a lot of the times why people take on this as a career, why they take it on as something they feel enthusiastic about. There's a purpose to it. They might be, there might be projects, or might be shorter term in terms of sort of it could be, I don't know, a few months to a few years, but it's not 50 years. An M&A or some kind of process takes a bit of time, but it does sort of work its way through. And you starting again every time you go straight into the rough and tumble of it. You work through the different issues, and then you come out on top, and then there's another project, and off you go again. And I think you need a certain, not a certain, you need a large amount of grit to get through that. And I think mindset does count a lot for that. So yeah, thank you for that. I think that's a really good one. So let me introduce you quickly. So JP is the founding partner of Verdier Co Corporate Advisory, based in London, here in England. And I'm just going to quickly go through a few parts of your summary, but I think you're going to be better positioned to explain sort of what you do and how you got into it. But I mean, you talk here about corporate finance and investment banking with 20 plus years of experience advising senior executives at corporates, which obviously the larger entities, and PE firms, private equity firms, on strategic issues, large and medium-sized M&A or equity raising transactions worth a combined 25 billion euros. I mean, that's a significant chunk of change. That's not going to fit in your back pocket. That's huge. So that's how I'm starting. And I thought maybe you just want to sort of elaborate a bit on that, and then how did you get into this fascinating world?
Yeah, with pleasure. So, I mean, listen, I've had a strong interest in banking and finance for many years, and from my early ages. And that transcribed in reading the financial pages of newspapers, being interested in the life of companies, being passionate about business innovation, and it being a force for good. And I've obviously pursued studies in that field, in economics, in business, in finance, accounting. But also, I think it being much wider than that, languages and cultures and history and those topics. And the reason why I'm saying that is that being a banker is not all about Excel spreadsheet and numbers. It is, of course, a lot about that. But what is really fascinating about this job is that it's much more complex and comprehensive in terms of having skill set around, client management, having IQ and emotional intelligence and those topics. And so in my career, I worked prior to setting up Verdier Co 6 years ago. I've had the chance of working for four different banks, all well known, and all have separate sort of like identity and characteristics. So I've had the chance of starting my career with then a big, very well known French investment bank called Paribas, which was acquired then by BNP Paribas, and I worked there in Singapore and in London. And those were tended to be, so I started my career there in finance in different departments and activities, capital markets and the rest. And when I moved into, I would say, investment banking, then tended to be more, I would say, mid-sized, sort of like relationship-driven local clients and transactions. And then I was recruited by a big German investment bank, Deutsche Bank in London. That was in the early 2000s. And then we were very focused on, sort of like sizable, very structured transactions, combining M&A, equity, debt, and those topics. and very, very exciting until I would say around 2005 when I was headhunted to join. Then, I would say somewhat nascent, but established by very well-known investment bankers, a firm called Verdier Co, which is a renowned independent corporate finance and M&A advisor. And the bread and butter of the business here was really long-term, very close relationship with very senior executive in corporates, most of them being sort of like FTSE 100 companies or similar size if they were not listed. And ultimately, before setting up Verdier Co, the 5 years before, I joined a more global mid to upper mid market American investment bank called Jefferies, very focused on tech and healthcare. So I think that the general theme around this is, interestingly enough, all those banks, when I joined them, they were really on the cusp of pushing and spearheading their growth, either because they had relatively small operations or because they were sort of like reorganizing their activities. And I really enjoyed being part of, sort of like pushing and spearheading that growth and, sort of like planting the flag. But also, I think something that could be interesting for your audience is that it's not linear, and you touch upon a diversity of skill set, transaction type sectors, and that's what I really love. Also, is that diversity.
Yeah, and if it wasn't for the diversity, I think a lot of people in this fraternity would get bored. I think if you had to, some people like repetitive tasks, and other people like to be challenged. And I think sometimes there's a something in the middle as well. But I think if you look in your career and the attributes that you that you show, you like to get into the rough and tumble. And even on the advisory side, I mean, you do have to take on a lot on your own shoulders to make sure that things are being delivered. I mean, you can't just go in and sort of just say, okay, well, let me just tell you what to do and then leave. You got to go in there and say, look, I'm an advisor, but there's stuff to be done. Let's get on with it. Let's roll up our sleeves and get on with it. And tell me a bit about that, sort of a day in the life of JP, and how you actually get on with what you do.
Yes. So yes, there is a lot of diversity, and listen, I love that question because I think you learn a lot by listening to other senior executives on how they describe their days, because you always pick up a few good tips there. So I would say there is no such thing as a typical day for me, at least nowadays. It was obviously different at the beginning of my career. I still do quite a few repetitive things, to be frank, but there is a lot of diversity, and I do enjoy trying to find that diversity. So it's full of unexpected, but I tend to start my day, I would say, around 6-7 o'clock in the morning. I sort of like checking emails and sort of like clearing up a few things that I can act upon, put into action. And then I do love spending quite a bit of time with my family around breakfast, school run. And then I either work, from home, which is the case this morning, office, or obviously at clients or visiting clients. So the day tends to be packed with a lot of client advice, being a lot on the phone, being quite a bit on emails, doing quite a bit of analytical work myself, or working with my team on, analytical work, or reviewing what they have done. Managing the business, because obviously today I'm a founder, so it's about thinking about growth, strategy, positioning, new client development. Always thinking about clients. The best moment when I think about clients is actually in the morning in the shower, because then I tend to have like that one or two potentially bulb moments. And then having obviously quite a few meetings and calls. It's been a lot on Teams or Zoom over the last few years. Meetings do tend to, I would say, to re-emerge, but also a bit of traveling. For those that are particularly, I would say, strategic, significant, and where, you can't really, it's difficult to replace the personal interaction. And so one of the elements that is very attractive in our job. And then I would say that my day finishes between 6 and 7 o'clock for more family time, times with friends or client engagement, and then most likely then I pick up quite a few things afterwards. Whether it's clearing up a few emails, or at present we've been very busy on a few projects, and then it's it could be working late. But uh, what is really really enjoyable nowadays, and very different from my life in prior firms, is that it's much more flexible, it's much more balanced, and I think it has an enormous amount of value in terms of enthusiasm and innovation in the way you think, creativity for your clients.
Yeah, and I think that's the part of the rolling up the sleeves I was alluding to, because I think it's, you can't just sort of sit back and steer them, because these are deep issues that you're dealing with. I mean, you're dealing with people in their careers. You're dealing with organisms and organizations that feed people, that that has an impact in local economies, stakeholders, investors. I mean, you name it. There are so many different moving parts. There's customers, there's suppliers. You're dealing with individuals that have to make crucial decisions, and that rolling up of the sleeves, that I like to talk about that, because it's when you get involved as an advisor, you sharing in that journey that client of yours is going through, isn't it? I mean, you helping them see a different point of view. You're helping them, you're analyzing, you're looking at things. Yes, your team might crunch some numbers, but like you said, in the shower, you have those aha moments. I'm sure the thinking and the knowledge and experience that comes from a 20 plus year career. That for me is magnificent in being able to translate that into somebody's day, into someone's life, into someone's decision making process. I mean, that must be amazing to actually watch some of your ideas, some of the things that you share, and watch them come to fruition.
Yeah, I mean, ultimately, we are an enabler of the strategy of our clients. We may be, part of it, and at Verdier Co, we are very much part of it, also because of the type of deals we do. We work a lot on, acquisitions and buy side that can be bolt on or more transformational. So we tend to be very embedded in the strategic thinking of our clients ahead of a transaction. But ultimately, I mean, it's the client who makes the calls and the decisions, both on strategy and ultimately the shape and form of a deal. But it's really really rewarding to be able to assist the client and equip them with what they need to be able to take the best decisions. I think you've pointed a lot around business. It's people, it's human, and we do work in industries that are very centric around that. We work a lot in the tech space, consulting services, AI, and software. So it's a lot. The value in those businesses is definitely around the people, right? We work a lot in the healthcare space, medtech, biotech, specialty pharma, animal health, and again here it's knowledge, it's IP, it's people. And our third key sector remains sustainability, green tech, climate tech. And here you have people who are really also passionate about how they can change, the world and help, make it hopefully a sustainable place to live in. So yes, people are right, left, and center in the way our clients do look at transaction, apart from obviously all the financial aspects to it, because it's about ensuring that their businesses are sustainable, continue to grow sustainably, profitably, and for the benefit of all their stakeholders, including employees.
Do you have a methodology? Do you have a sort of a let's call it a practice, a way that you approach a new client? I mean, let's say someone says, you know what, JP, come and do some work for us. Is there a process that you follow, or do you take each one, based on your experience? You start from places. Is there some process that you've worked out over the years that's more successful than others?
Yeah. So, I mean, I'm not going to go into the details of, what is a buy side transaction, a sell side transaction, an equity listing or fundraising. But here you can see certain types of transactions, and obviously they have common characteristics. I think I will always start by trying to put myself in the shoes of the client,
Mm.
which is, what keeps him awake at night. And we tend to talk to, CEOs, board members, chairmans, or head of M&A, or head of business lines. That could be pretty big, I mean, they can be, divisional head of multi-billion companies that do manage 1, 2, 3, 5 billion pounds of turnover. So very senior executives, and what they tend to have on their agenda is obviously strategic. It's a competition. How can they be disrupted? It's growth. It's acquiring six skill sets. It's acquiring capabilities, market footprint, or it's obviously in certain other extenses. It could be businesses that they have that no longer fit their portfolio, and where they could reallocate those resources, whether they are financials or otherwise, towards other business lines, and therefore who could be the best new owner of that business, ensuring obviously that they realize value, but that the transaction is for everybody's benefit, from a human point of view, financial point of view, or reputational point of view. So thinking about, I don't know what exactly you meant by, if we have a set methodology, but yeah, we with experience in any business, with experience you start to quite quickly understand what are the touch points, and what should be the discussion items.
Because some people talk about blueprint, some people talk about, this is the way we, when you are pitching for new work, or when you're doing different things, they say, okay, I mean, the common thing is, so JP, sort of, how does this work, and how much is it going to cost us?
Yeah.
I mean, isn't that? I mean, that's a common question. I mean, it doesn't matter what business you're in, really.
Yeah.
And it's sort of the, how does it work? Sort of, yes, okay. Well, day one we come in and we do these types of things, and day two, it's not a let's call it an exact project plan. It is more an approach, I think, that I'm asking, and I think that's what I've found. A lot of the really successful guys like yourself have an approach. You tend to do it naturally without even thinking about it.
Mm-hmm.
But you have an approach when you go to a client. I mean, I see you smiling, so I'd like your opinion on that.
Yeah. So again, I'll go by the client. First, listen to the client.
Mm.
What has he got on his agenda? What's today is really annoying him or exciting him, and how can you help him solve that issue as an advisor? So if I were to take the example I was just saying, we do a lot of buy side or acquisition transactions, and we've got about 4 or 5 on the go at present. So the sort of like topics that a client will be interested to know is, well, how can we approach this company? Is it for sale? Would they be interested to be acquired by us? Who else could be looking at it? So what is the interloper analysis? What do you think could be the value? How could we integrate it? What are the risks in terms of integration? What are the synergies or dyssynergies with that? Can you help us reach out to this company on a confidential, non-confidential basis? Can you help organize, meetings and sort of like agendas and discussion points? How can we get traction with that? Then do they have also a financial advisor? What sort of information could they share with us? What sort of work can we do in terms of understanding the business from a legal, operational, financial, HR point of view, IT point of view, and technology point of view? Can you help do evaluation work? Then that's potentially the standalone value of this business. What's the value to us? Would they accept to sell it at that price? Then what's the strategy? What's the structure? Would they sell 100%, part, minority, majority? Do we want to provide an earn-out? So then we get into the structuring conversation. And then you're going to go into obviously legal aspects, access to data room, having them open their book, and then start to negotiate a whole raft of agreements, whether it's a share purchase agreement, whether it's a shareholder agreement, whether it's articles of associations, continuation, transition services agreement. And here I'm talking about obviously a private deal. In a public arena, it's different. It's an offer document and those topics. And then if you think about the flip side, then on a sell side transaction, then it's different. And if it's a joint venture agreement, that's obviously different. So we of course you do have a little bit of a blue book and so, but all the stuff.
I'm loving that. So although I mean the approach stays roughly the same, but it's in the detail, and it's the stuff that you do in the detail which is fascinating. I think one of the things this podcast is about post-merger integration, post-acquisition integration, and we talk a lot about how the setup. I mean, I don't know if you're a golfer, but when you tee the ball up and you're going to take a swing at it, it's like it's all the stuff you do before and during your swing that has an impact on where the ball lands eventually. I think a lot of the work that you do, buy side, sell side, and so on, has a massive impact on what's possible when it comes to integration, setting the let's call it the outcomes that you want from the actual deal would talk into the integration side of things. So tell us sort of what goes in the back of your mind. So when you're thinking about that, you're advising your client, because it's one thing to structure a really good deal, but the other part is to make it happen, and to structure a deal that's realistic, and not just structure a deal that sounds good on paper but difficult to implement. Tell us a little bit more about that, and it goes on in your mind.
Yeah. So I love your analogy with golf, because a big parallel with our job is that we've got to think about the end point and then work backwards. And so PMI is a topic which, as you can easily understand, because of the sectors in which we work and the type of transaction, those are acquisitions, and therefore because we are embedded really as an independent corporate finance advisor, we're really embedded with our clients, and we love that. We tend to be, involved in those topics much more than you would in a traditional, I would say, pure transaction-led investment banking work, and we really enjoy it. So the reason why it is important for us as an advisor is that we want to make sure that this transaction is successful for our client and that they're happy with it. So in any shape or form where we can assist them in thinking about it and having, I would say, the blueprints, the action list, I mean, all this, being equipped with all of that, it's important. So we think about it. But also, we want to make sure that doesn't become an issue or topic at the last moment in a deal. And we've seen that quite often, where in the past clients tended to think about PMI pretty much when they were, actually, we're going to hold the keys of this company in a week's time. What have we thought about their future? Because everybody is very focused on the opportunity to acquire the business, doing the transaction, but then actually they are going to own it. So this is a topic which is nowadays much more at the forefront and at the very beginning of the thinking process of our clients and our thinking process than it used to be the case 10, 15 years ago, 20 years ago when I started my career. Maybe I'll just spend just 1 second because, PMI is a very vast topic. I mean, we are not, PMI experts, but as bankers, we get involved with it. And as I was saying, we think about it. And then we can think about whether, the client has got the in-house capabilities or whether it rather also have, tech expertise from external professionals. But I think just for the audience, it's useful to understand that there are different PMI, I would say, approaches. You may have the one where basically it's a fully integrated acquisition. So you acquire the company and you almost dismember it or completely, subdue it. A company that used to do that in the past was General Electric, for instance, and extremely, good at it. Now things change. You have others that are, I would say, have an approach where basically it's almost fully independent, and they may integrate over time. I mean, for instance, Honeywell used to do that. Capgemini or Accenture have got philosophies that are akin to that. Then you have obviously the in between. So you may integrate certain capabilities or operations of the target company and take the best from them, or you may give some of your own way of doing things to them. So it's a mix and match. And there is the fourth one, which you may see in certain transactions, which is actually reverse integrate. So you're the acquirer, but actually you integrate your business line, your division or otherwise, into that new acquisition.
Yeah, that puts another spin on it because obviously there are other types of deals as well that's starting to happen, and I love your reverse because it does mean that you're almost saying like, I'm buying you, but I'm becoming part of you, and that's very interesting. And but where the others are also quite interesting are the carve outs, and the separations as well, and so it's just become such a science, in a way, PMI, and it's become such a discipline that you can't, I think any executive these days needs some level of PMI on their resume. They need that, at least some experience or some understanding of what PMI actually is, which I don't think was the case 20 years ago. 20 years ago, if you put PMI, people would say, what is that? And now it's sort of, wow, okay, well, it's also almost a requirement, because most businesses these days, especially with the fast moving environments like tech and sort of your environmental things, there's a lot of activity. It's not always great activity, because sometimes there's some really bad let's say choices that are made, but there's constant talk about how do we grow. I mean, there's really only two ways if you think about it. I mean, we either spend money at sales and marketing, or we go and buy other companies. How do we actually expand our entity geographically, or with tech, or with staff? I mean, finding really good people, sometimes it's just much easier just to buy another company and take their employees and put them onto your payroll, because you just can't, just the whole recruitment process is so very, very difficult these days. So there's so many different reasons why, and I love your relation to sort of, you got to be thinking, and that's that whole golf analogy. You got to think about where your ball's got to land. I mean, it doesn't help you're on the green and you're putting and you take out your driver. I mean, that's not going to end up in the hole, and vice versa. You're not going to take your putter and tee off with it. Well, I mean, unless you've had maybe too much to drink. But I think the whole thing is you have to really understand the entire journey that's coming, and also what needs to be achieved. So I'm liking that. I'm liking that whole approach. You do get involved. I mean, you do very much get involved with your clients, and coming from an investment banking point of view, the buy and sell side knowledge and experience would be huge, because that's what you do as investment bankers, isn't it? I mean, you analyze whether deals are good or not, and whether you want to pitch that deal to be done. Often, as big investment banking firms, you'd go to the two firms and say, how about the two of you get together and have a conversation, and we'll put the deal together for you. Isn't that investment banking?
Absolutely. Yeah.
And you would have done hours worth
for our clients.
Exactly. You would have done hours worth of analysis and research and all that to see, what, if we put that one and that one and that one of those together, in fact, together they mean this, or if we start splitting that one out, carving, it becomes a bit like a chess game if you think about it. I mean, that's why I'm finding it fascinating speaking to you today, because although you don't spend that much time on the PMI, you spend a lot of time on the setup of that, the rest of the journey. Is that a fair enough assessment of what you do?
Yeah, listen, you're spot on. I think you're completely spot on. I mean, you made references to senior executives not having PMI experience 20 years ago, and nowadays being right, left, and center. I mean, uh, for instance, I mean, just two transactions we're working on today in the tech space. One is exactly what you're mentioning. It's a carve out in the Nordics for in the IT space, and that's the reason why I was a bit late on the call. And the conversation is effectively, you know, in the carve out, what is it that they are going to put in the basket? How are we going to think about integration? How are we going to think about topics around, cultural alignment, motivation, retention of employees? And you mentioned, for instance, how tight the labor market can be for very skilled software and AI engineers. So those are key topics, and they need to be really set from day one to make sure this is successful, and that the infamous probability of success of an M&A transaction being tended to be referred to be in the 50-60% historically.
Hmm.
Well, that for our client we make sure this is a 80-90% scenario, because the PMI topic has been thought through well ahead.
Yeah, and I think it's now become critical. I mean, you got to have that as part of your conversation. In the past, I'd always got the sense that due diligence and during that whole initial process was all about understanding the structure of the deal, but never really giving enough thought to the how. It's like almost more about the what and not so much about the how. These days, it's a lot more about not just the what, but about the how and the who, and and all the tools and the processes and things we need to follow, and how and who we need to get on board.
Mm-hmm.
Because do you bring external teams? Do you build your own internal team? Are you going to become, are you doing serial acquiring, or is this a one-off? I mean, there could be many reasons. Or do we do regular? Do we set it that we will only do one a year or one every 3 years? If I look at one of the software vendors that's quite well known in the UK. I see they've recently done an acquisition, but they hadn't done one now for about 4 years, I think. Um, and it's a very slow. I mean, I would have thought the tech space would have been a lot more acquisitive for that particular space, but it's almost like there's this hesitancy for some entities to get into that, and then there's other entities that are a lot more hungry to acquire. I mean, it's like we got to. It's like this drug. It's like this deal heat, if you like, and I mean, you probably see that and advise on that as well.
Yeah. So, I mean, on this one, I probably two answers. Yeah. I mean, clients have got a diversity of M&A culture, appetite, expertise for a variety of reasons, and therefore it's important that when we work with our clients, that we do realize, what is that level of knowledge and expertise that they have, and how we can best fit. Some clients, are extremely versed with it. Do relentless M&A? That's embedded to in their business model, and therefore, we come with a certain set of services in terms of supporting them there. We have a lot of clients where the M&A culture and expertise can be more recent. But giving you an example, I mean, we've been working with about a 2 billion turnover international integrated facilities management company that is owned by a big private equity firm, and they've had M&A on in the back of their mind for a few years, but the new private equity firm is obviously extremely well established. It's a 20-30 billion fund. They know M&A. Doing recurring bolt-on is part of their way of thinking, and they are really providing and recruiting experts like head of M&A, and so within their organization, and pushing the M&A strategy very significantly. It's almost like a project every month or 2 months that they have, and they bring that PMI knowledge. But for the example you just gave of a company that may do M&A on an on and off basis, that's where I think they ought to, if they don't, call upon PMI experts, consultants, independent consultants that can assist them in thinking about it ahead, but certainly also implement it. The second part is, for me, where I've seen clients being very successful, is ensuring that there is accountability in when they do transactions at senior executive level, and there is continuity in the leadership on the transaction. So from during the transaction and afterwards, and not that it completely drops the ball, where it is quite often the case, for instance, for external advisors like bankers, but within the company, that shouldn't be the case. And that's where PMI experts and consultants can help.
Yeah, I also, and this is the last point around this, is I've also seen that when you got an entity that does a lot of acquisitions, it also changes the nature of their own organization, because they tending now to, it's a bit like, I mean, you've seen it. You have a board, right? You have an executive. They're a good team and they work very, very well together. Now, one of the members leave and it gets replaced by someone else. The dynamic starts to change, doesn't it? Now you have another person leave, another person replace. Now the dynamic changes again, just because of the nature of bringing new people on board. When you're an acquisitive firm, you're not just, I mean, often, it depends on how deep the integrations are, of course, but you are sort of cross pollinizing, if I could use that word, but you are doing a lot of that across the organizations, that over time the acquiring entity theoretically, and you must just tell me what your experience is, but theoretically will start experiencing changes even within themselves, because they'll be taking on management. Their management will be joining other entities, and you start having this. I've seen entities start diluting too much, where they take all their really good managers and place them out in the marketplace, and they have fewer managers managing the core business. Have you seen that? I mean, I've seen that, and then things start to fall over. Especially, you only realize it later on, or much later on, as things start unraveling. Yeah. Any experience on that?
Yeah, so I don't know if what I'm going to tell you really answer your question, but from my perspective as an M&A advisor, it is critical that that the management team in the company that our client may be looking at acquiring, or that we may be advising to sell, remains focused on their business. Because a transaction can be, it is highly time consuming. It diverts management from their day-to-day business. It pulls resources from loads of different areas within an organization. And it's important that what I would call the assets, the subject of the transaction, is not being damaged because the management team take their eyes off the ball. So I don't know if that quite answers your question, but it's a way to say, recognizing the value of people and human beings and managers, in terms of having the ability to focus on the business and having the right skill set to manage that business and drive it.
No, that's a very valid point, and that's exactly the answer I was looking for. Is there's a lot to be said about focus. There's a lot to be said about sticking to the knitting, if you like, or sticking to your day job and sticking to what you're good at. Because if you get too many additional tasks, unfortunately, we only have that many attention units, if you like, in a day. There's only so much that you can do. And as a management team, sometimes the really good managers often get stretched, past their ability to be effective. And I've seen that as well. So I think as an advisor, and this is where I'm coming back to you, and I want to then talk a little bit about your company, because we're coming close to the hour now. As an advisor, I'm sure these are some of the conversations you're having. You're saying, guys, we would need to think about the old transaction and all that, but let's think about the teams. Let's think about the people. Let's think about the team we're acquiring. Let's think about your management team. Let's think about all those elements, because the only way we're going to create value out of this transaction is if we have these and these and these things in place. Would you agree with that as a premise?
Completely. So, I mean, the way I would say it transcribes very practically in my job is to ensure that leaders do meet. So between the acquiring company and the target company, or the business we're selling with their potential new investors and shareholders, that they meet, that they have the opportunity to sort of like socialize on a personal point of view, that they can exchange on strategy, business, and so. But that also sort of like permeates within the organization during transaction and due diligence process. And then obviously in the way we sort of like kick off processes, making sure again that we've got the resources and capability on our side. So meaning that our clients is thinking how he's going to handle it and what that means, and pool resources at the different stages. We've got to think about confidentiality and that sort of topics and avoiding rumors, but also that he thinks about the sort of like external advisors that he may want to have if it doesn't have either the bandwidth or the knowledge or skill set, whether it's a financial due diligence advisor, an accounting due diligence advisor, a tech advisor, an HR advisor, a PMI, and so on. So that we are a good strong team that may evolve over time to make sure that it becomes a successful project.
So tell us a bit about your team. Tell us a bit about your company, what you do, how can people get hold of you, sort of where, what's the kind of clients that you're looking for, and so on.
Yeah, sure. So very, very happy to do that. So listen, first of all, I'll start with the team. I've got an absolutely amazing team that has been growing over the last few years. So the firm was set up 6 years ago. We do business in the UK and France, meaning actually where most of our clients are, or the assets of a transaction. So it can be, UK, inbound UK. It can be UK outside, France similarly. So it can be a permutation of that. But we do recognize that part of our skill set is to be, on the ground. I've been doing investment banking for 20 plus years in the UK, but also in France and other jurisdictions. But we've got a team of 10 colleagues, variety level of seniority. I like to call it a bit the United Colors of Benetton, because we speak probably 9-10 languages, a variety of skill set. And that allows us to do, I would say, so as I was saying, buy side M&A, sell side M&A, fundraising, a lot of strategic work in the background, like Bain & Co. with the corporate finance hat on. And we've been extremely successful also in helping our clients doing very, very detailed target scoping acquisition exercises and mapping, and sometimes helping them doing the outreach. But that independence and long-term mindset is very, very much enshrined within the way we do business. And we work for corporates, tend to be big corporates, but also they could be listed, they could be private equity owned, they could be owner founder owned, and more specifically with a couple of private equity funds on a selective basis.
Oh, that's great. And then how do people get hold of you, JP? How do they get hold of you?
Very easy. We're all very open-minded. So first of all, I would say just have a look at our website, www.verdierco.com, VERDIERANDCO.com. Please do follow us on LinkedIn. You can search us there, and just reach out to us via LinkedIn messages. And don't hesitate to reach out to any of my colleagues, not only me. We are very keen to hear from potential candidates. We are going to scale up further the firm with some senior and very senior recruits. So always happy to engage in those dialogues. But candidates or just to do business together, or if you're a service provider, we are very tech and digitally savvy. So if you have propositions that could be relevant to our business, very, very keen to hear.
Love it. Thank you very much, JP. Thank you very much. I really appreciate you coming online, and I know you're very, very busy, and that's why I started a little bit earlier, because I knew you'd come online at least sometime while we were talking. We finished dead on time at 12 p.m. you can pop onto your next meeting now, which I'm sure you've got lined up. But JP, thank you very much. It's been fascinating getting to know you and your company. We've had a previous conversation as well, which I thoroughly enjoyed. I really want you to be on the show again at some stage in the future. Maybe next time we cover one or two case studies and just share a few different things with the audience. But fascinating talking to someone who's got a really good background in this investment banking, buy side, sell side, and teeing up, again, using my golf analogy, the right kind of PMI going forward. And I like your concept around 80% is what you're aiming to get in terms of success, in terms of value creation, etc. JP, thank you very, very much. Much appreciated.
My pleasure. I really enjoyed the conversation also, and let's keep in touch. And I wish you a good day, as well as all your audience.
Thank you very much. All the best. Thank you.
Bye.
I'm going to say goodbye to the audience, and then we'll catch up with you again sometime. Thanks, JP.
Very good. Thank you. Bye.
Bye-bye. Okay, everyone. Thank you very much for joining us for another episode of 100 Days and Beyond, the podcast that dedicates time and energy and effort to those special individuals, those wonderful people out there that do so much for business, for making this entire economy of the world that we live in, the economy that pays our bills, puts roofs over our heads, feeds our families, and makes things happen in the right kind of way. I think people are getting smarter, savvier, and we have people such as JP that come online within this environment, bringing in a wealth of experience, knowledge, and advice to clients to be able to deliver on the outcomes that are needed to be able to continuously grow and develop as markets change, as humankind changes, and as we become better and more sustainable over time. Thank you very much for joining us today. Hope to see you on the next episode of 100 Days and Beyond. Have a fantastic weekend, and we'll chat to you again. Bye-bye. Hi, everybody. This is Dudley again, and if you need help with a future or existing post-merger integration, I want to invite you to arrange a free, no obligation meeting with us. During the meeting, we'll find out exactly what you need, what your challenges are, and we'll explain how our unique PMI slipstream method can help you. Simply call us or visit mergerintegration.co.uk. That's mergerintegration.co.uk, or come to our website, skillfulpursuit.com.